Hey, so I just kind of wanted to do a quick video on about why traders lose money in general, really. So let's get started. So the first reason is I believe that it's overtrading. We have kind of a misinterpretation of what trading is all about, and if you're watching the films and I don't know TV series, maybe they have somebody on the computer tap in buy sell every second. I can assure you that is not what day traders are doing, okay? Well, not the successful ones. All right. Day traders, intraday traders, if we're talking about them, maybe they're looking to get about 3 to 4 good setups a day, and the rest of the time it might be kind of speculative trading. And if we look at the kind of the longer time frame traders, the midterm traders, or even the investors, they perhaps are making 3 to 5 trades a month. Yeah. So you really shouldn't be over trading. All right. So it's all about the control of your emotions, and yes, you might see very good setups coming here and there and over there, but you really got to be talking about and thinking about your risk management, which we'll get onto in a second. You shouldn't have too many positions open on one account. That is, not a good recipe for a successful trading strategy. Okay, even mutual funds, or hedge funds, they would split their trades into different accounts because of risk management and so on and so forth. But the one thing that I wanted to ask you is what time frame are you trading? Are you trading, intraday on the hourly charts, or 15, or daily charts, or weekly charts? And does it match with your job? And what I mean by that is, if you have a full-time job but you're trying to trade, say, the 15-minute candlesticks, I wouldn't say that would match up with what you are able to do. And the reason for that is, regardless of your execution and your preparation for the trade, you've got to manage your trade, whether that is by trailing stop or manual movement of your stop. So management is a key issue, and people just forget about that, especially when you're over trading. If you have 10 positions on, you cannot manually look at all of them and manage all their targets and stop losses and so on and so forth. Okay. Alright, so let's jump on to the second reason, and it's perhaps something that is overlooked because people just think it is too easy to look at, and they just don't do their homework, really, or perhaps of lack of education in terms of finance. So the reason why I say wrong risk is when people using the wrong lot sizes, the wrong volumes, and when this becomes a problem is perhaps when somebody has incurred a few losses, a few big losses. So you've had, a good steady streak, and then bang, you've had a few big losses. And then what tends to happen with us is we want to get back to that position. We want to get back to our winning streak really quickly. So we try and cover for all the losses that we've just incurred, and probably trying to come out on top as well. So trying to get that extra little bit of profit to get back. And that is not the way to go at all. You gotta really just take those losses as they come, just like you did with your wins. Forget about the losses in terms of that money is gone. Yeah, those pips are gone. I don't really think about my trading in terms of money. I think about it in terms of pips, which helps me a lot. So if I'm down X amount of money, I just simply put into pips perspective and say, I'm down 50 pips or 50 points. That's not too bad, out of a weekly or monthly trading. But what I'm trying to say is, poor risk management, not understanding leverage, or even the simple things such as, your weekend leverage changes. And if you don't know about this, you should definitely go into your account and find out with your broker what your weekend leverage is like, because if you're keeping over weekend positions, and you have the wrong risk, i.e. the wrong volume and the wrong leverage, that can really be a kick up the backside. So, when you're trading, it really depends on your approach to risk, and I view trading as a steady process of growing your account. I don't like to have huge swings. So if you treat your trading account as a casino, well, you know what I'm getting at. Okay, so lastly, let's have a look. So it's this idea that traders are losing because, like we just spoke about, is when you incur those few big losses, you just simply, utterly, you cannot comprehend why you've lost those, and you're just unable to forget why this is happening. Some people take it really personally. I know I certainly do sometimes as well. But it's all about self-reflection in the bigger picture, in the longer term of, is this just a little bit of a blip in your journey? Yeah. It's a little bit harder if you're just starting out and you just encounter those few big losses. What I say to you is probably withdraw a huge chunk of your money first, because you're going to make mistakes, and I recommend that you make those mistakes as cheaply as possible. So if you have a 10k account, it's probably not worth making all those huge big mistakes initially. So if you equate that to about a £500 account, then and you make, 10-20 mistakes in a row, it probably won't hurt as much as a 10k account would if you're taking the same 1 or 2% position sizes. Okay. So really what I'm trying to say is that think about the longer term picture. It's a learning process. It's a continuous learning process no matter how good you are. And really, until you realize that, those trades are done and over with, and you can't really forget about them, don't log in to trade again, alright? It's just not healthy for your mentality, for your psyche. The key thing here is once you've had a few of those losses or a losing week, whatever, get that negativity out. And my number one recommendation for this is working out, jogging, seeing your friends. Just get away from the computer. Talk to somebody about that's completely non-trading related. Yeah, it's not good to be stuck on those things that would keep you down. And forget anything else that is really going on, and don't get back to the markets until you actually want to be back on them, because it's a different story when you've had a loss and you're trading to make up for that loss. But it's way more productive to actually look at the markets when you want to be at the markets, and you'll see the difference. Instantly. Yeah, you'll start to see things a little bit more clearly, with a little bit less stress levels as well. Yeah, very much helps. So if we were to wrap it up, let's just think about this. All right. So my last recommendation is this. Old school is a little bit better than the current school in terms of the way we write things. I.e., I would say write your trading plan on paper. Yeah, this helps so much, because as you're writing on paper, you can't just simply backspace and have a clean Word document again. Yeah, so as you're writing on paper, you're thinking about what your trading plan is actually, and if it even makes sense, because some of the stuff that we write maybe on Word, and then we erase, it just because it doesn't make sense, but you tend to think a little bit more when you're writing it down on paper. All right. And what does this do for your trading? Well, once you've written it down before you've executed a trade, you can't argue against yourself. You've written it down. Yeah, it's not like on a computer you can backspace and erase things. You physically cannot argue. Okay, and then you can come back to it afterwards and do a proper non-biased review about it. And lastly, if you're an intraday trader and you just get stopped out too quick, a couple of times, I think just quit for the day. Really, don't try and drag those trades out. If it's not working, just not working. Just recognize that it's not working. All right. So I wish you all the best. I wish you the ability to develop your self-reflection, and most of all, happy trading. All right.